Hello and welcome to my Cryptocrat, where we talk about all things personal finance. Today's topic is an important one that affects everyone who has ever applied for credit, whether it's a credit card, a car loan, or a mortgage. That's right, we're talking about credit scores and how to improve them. In this video, I'll be covering everything you need to know about credit scores, including what they are, how they're calculated, and what you can do to improve yours. What is a credit score? Let's start with the basics. A credit score is a number that lenders use to evaluate your creditworthiness. In other words, it's a measure of how likely you are to repay your debts on time. Your credit score is based on several factors, including your payment history, the amount of debt you owe, the length of your credit history, the types of credit you have, and any recent credit inquiries. How is a credit score calculated? There are several credit scoring models out there, but the most widely used one is the FICO score. FICO scores range from 300 to 850, with higher scores indicating better creditworthiness. The FICO score is calculated using a complex algorithm that takes into account all the factors I mentioned earlier. Payment history is the most important factor, accounting for 35% of your score. The amount of debt you owe is the second most important factor, accounting for 30% of your score. The length of your credit history, the types of credit you have, and recent credit inquiries each account for 10% of your score. Why is a credit score important? Your credit score is important because it can affect your ability to get credit and the terms and interest rates you'll be offered. If you have a low credit score, you may be denied credit altogether, or you may be offered credit at higher interest rates and less favorable terms. On the other hand, if you have a high credit score, you'll be more likely to get approved for credit, and you'll be offered better terms and lower interest rates. How can you improve your credit score? Now that you know what a credit score is and why it's important, let's talk about how you can improve yours. There are several things you can do to improve your credit score, but it's important to remember that it takes time and effort. There is no magic formula to instantly improve your credit score. Pay your bills on time. The most important thing you can do to improve your credit score is to pay your bills on time. Late payments can have a big negative impact on your credit score, so make sure you pay at least the minimum amount due on all your bills by the due date. Keep your credit utilization low. Credit utilization is the amount of credit you're using compared to the amount of credit you have available. High credit utilization can lower your credit score, so it's important to keep it low. Ideally, you should keep your credit utilization below 30%. Don't close old credit accounts. The length of your credit history is an important factor in your credit score, so it's important to keep your old credit accounts open, even if you're not using them. Closing old accounts can shorten your credit history and lower your credit score. Don't apply for too much credit at once. Applying for too much credit at once can make you look like a high-risk borrower and can lower your credit score. If you're planning to apply for credit, spread out your applications over time. Ask for a credit limit increase. One way to improve your credit score is by increasing your available credit. If you have a good credit history and have been using your credit card responsibly, you can try asking your credit card issuer for a credit limit increase. By increasing your credit limit, you can lower your credit utilization ratio, which is the amount of credit you're using compared to your total available credit. A lower credit utilization ratio can improve your credit score. However, be cautious about asking for a credit limit increase if you tend to overspend, as this can lead to more debt. Use credit wisely. Using credit wisely is a key factor in improving your credit score. This means only borrowing what you can afford to repay, making timely payments, and avoiding maxing out your credit cards. Maxing out your credit cards can hurt your credit score because it increases your credit utilization ratio. Additionally, making timely payments is crucial to maintaining a positive credit history. Late payments can stay on your credit report for up to 7 years and can significantly impact your credit score. Consider a secured credit card. If you're having difficulty getting approved for a traditional credit card, a secured credit card might be a good option for you. Secured credit cards require a security deposit, which serves as collateral in case you default on your payments. Because the security deposit minimizes the lender's risk, secured credit cards are often easier to get approved for than unsecured credit cards. By using a secured credit card responsibly and making timely payments, you can build a positive credit history and eventually qualify for an unsecured credit card. Address any negative items on your credit report. Negative items on your credit report, such as late payments, collections, or bankruptcies, can significantly impact your credit score. It's important to address these items as soon as possible to improve your credit score. You can try negotiating with your creditors to remove negative items from your report or work with a credit repair company to help you improve your credit score. Keep in mind that credit repair companies are not a magic solution, and some may even be scams, so do your research and choose a reputable company if you decide to go this route. Be patient. Improving your credit score takes time, so it's important to be patient and persistent. It can take several months or even years to see significant improvements in your credit score. However, by consistently making timely payments, keeping your credit utilization low, and addressing any negative items on your credit report, you can gradually improve your credit score over time. In addition to these tips and strategies, it's important to remember that your credit score is just one factor that lenders consider when evaluating your creditworthiness. Lenders also look at your income, employment history, and other factors. So even if you have a low credit score, you may still be able to qualify for credit if you have other factors in your favor. In summary, improving your credit score takes time and effort, but it's worth it in the long run. By following these tips and strategies, you can build a positive credit history and improve your credit score over time. Remember to pay your bills on time, keep your credit utilization low, keep your old credit accounts open, not apply for too much credit at once, monitor your credit report regularly, use credit wisely, and be patient. Thanks for watching, and I'll see you in the next video.